I'm always willing to provide, thoughts on constructive digital assets policy, either in confidence or publicly. And if I'm asked to serve on some sort of digital assets advisory council, I'm probably would do so, yes.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Michael Saylor will talk about why he's still buying Bitcoin and how he'd advise Trump on crypto. Let's catch him to know more about his bold crypto insights and strategies.
Yeah, when we announced it wasn't clear how enthusiastic the capital markets would be, but we got a very enthusiastic reception. And then after November 5th with the red wave, we saw a big sea change in the political environment. And so we went faster than we had thought we were going to go on October 30th. Our goal is to continue to raise capital primarily through fixed income markets. So we'll pursue preferred stock or convertible bond or other equity-linked financings, as long as it's creative for our shareholders. When we get through the 21 plan, which is $42 billion in capital, we'll revisit our capital plan, and we'll put in place a new plan subject to market conditions at the time. Well, just the equity capital markets were very enthusiastic over the past 4 weeks, and so we're always considering, is it the convertible market? Is it the fixed income market? Is it the equity market we want to go to? And that's going to change from time to time. I expect that mix will shift more heavily toward fixed income markets in Q1 as we go forward, because right now we're probably getting a little bit too delevered, and we'd like to actually get more leverage. We have about $7.2 billion of converts, but $4 billion of them are already essentially equity. They're through the strike price, they're through the call price, and they're trading with a delta approximately 100%. So they're looking like equity, and so we would like to go back and build more intelligent leverage for the benefit of our common stock shareholders. When we execute the ATM, we just sell equity into the market if we like the price and we like the terms, and if we think that the equity is undervalued, we don't, but we don't specify any particular buyer. I think that's just pari passu to every other investor in the market. Well, we have a very healthy software division now, and we're very proud of it, and I did create it. But we think of ourselves primarily as a Bitcoin treasury company now. So our primary method of generating shareholder value is through our treasury operations. And if you think about there's 3 ways to create value for the shareholders. There's operating income, and our software business generates about $75 million a year of operating income. There's also investment income. That's been difficult to track, but right now we have $18.6 billion of unrealized investment income. People will start to get a better handle on that when we switch to fair value accounting next year, and then you'll actually see investment income captured in GAAP accounting. And then the third way to create shareholder value is acquisition income. So when Apple buys back its own stock, or when Oracle does M&A acquisitions, or when you do an LBO, you're basically taking capital, which is cheap, to buy a capital asset, which is a higher return. So Microstrategy is engaged in that capital acquisition process. We issue equity and debt. We buy Bitcoin. That's resulted in about a $14.4 billion benefit if you value the Bitcoin at 105 for our shareholders this year. And so we do all 3 of those. Obviously, the big numbers, the investment income, the acquisition income, are more due to Bitcoin treasury operations.
Bitcoin recently reclaimed the $100,000 level after briefly dipping below this significant psychological mark, causing a stir among traders and analysts alike. The dip occurred following hawkish remarks from the United States Federal Reserve. which hinted at fewer rate cuts in 2025 than previously anticipated. Bitcoin fell to $99,047, marking its first drop below six figures since December 13, but quickly rebounded to trade at $100,990 at the time of writing. Pseudonymous crypto analyst Rect Capital highlighted the formation of a potential bearish engulfing candlestick on Bitcoin's weekly chart, suggesting a possible downtrend in the short term. However, Rect emphasized that the pattern would only be confirmed at the week's close, leaving room for significant price movement in either direction. Technically, this is still a dip until weekly levels are confirmed as lost, they explained, urging caution before making definitive conclusions. Despite the pullback, many traders viewed it as a routine correction rather than a cause for alarm. Crypto commentator James Lavish argued that reactions to Federal Reserve policies shouldn't influence Bitcoin investors who understand its long-term value. Similarly, Bitcoin Archive noted that such pullbacks are common, with 8 similar corrections occurring since October. This volatility follows Bitcoin's monumental rise earlier in December, when it surpassed $100,000 for the first time, fueled by enthusiasm around a Bitcoin exchange-traded fund, ETF, anticipation of the April halving, and Donald Trump's presidential election victory. Yet, Rect reminded traders that corrections are normal in price discovery phases, particularly during the 7th and 8th weeks, where historical data often shows temporary downturns. While the path forward may remain turbulent, seasoned traders see this volatility as an inherent part of Bitcoin's market behavior, emphasizing the importance of perspective and patience during these corrective phases.
Obviously, it's the decision to enter the S&P 500 is above my pay grade. So they will make that decision. But I'm optimistic in 2025 when we adopt fair value accounting, when we end up with $50 billion of assets on our balance sheet under fair value. If Bitcoin goes up 20% a year, you're looking at $10 billion a year of investment income. So I expect we'll be generating billions of dollars a year or tens of billions of dollars a year of investment income, which becomes GAAP profitability. And I think that is the final thing people are looking for inclusion in the S&P. We use regulated exchanges in the United States like Coinbase. And when we're buying, we'll be buying on a simple like TWAP algorithm. So our goal is to not be noticed by the market, not to move the market. If anything happens with the Bitcoin price or even with the Microstrategy price, it isn't us. Our objective is to basically be market participants, but never move it up or down or be noticed. No, we're very partial to it. We love the software business. I invented a large piece of it. We love our customers. We enjoy it. It's profitable, and it's a core part of the company's identity. I think Microsoft's one of the great companies in the world, so they don't really have a need to adopt a new idea. But in essence, Microsoft's strategies are to buy their own stock back and to park short-term cash in treasuries and then to pay out dividends. That's very conventional. That's the finance playbook that would be taught at Harvard Business School. And if you're a successful company with a great business, you tend to stick with that playbook. The playbook changed, it changed a few days ago when fair value accounting became mandatory. We go into 2025, I think you'll see the repeal of SAB 121. I think you'll see fair value accounting. I think you'll see Bitcoin embraced as a digital commodity by the regulators. We already can see the political winds are very favorably shifted. Now, for the first time in 100 years, large public companies have a capital asset that they can consider in lieu of treasury bills, and that's Bitcoin. It doesn't make sense to consider real estate or gold or paintings or barrels of oil as a treasury asset. It does make sense to consider Bitcoin. So really, we're year one of a new era, and I would think that the companies that embrace it first are the ones that have a need to know, or they're very close to the Bitcoin industry, the digital assets industry. The Magnificent Seven, they'll embrace it later because they don't need it now.
Federal Reserve Chair Jerome Powell recently clarified that the central bank has no plans to own Bitcoin, citing legal constraints under the Federal Reserve Act. During a December 19 press conference, Powell firmly stated, We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. He emphasized that the issue of potentially altering these restrictions lies with Congress, not the Federal Reserve. Meanwhile, President-elect Donald Trump has renewed calls for the creation of a strategic Bitcoin reserve. Trump has been vocal about positioning the United States as a leader in cryptocurrency adoption, highlighting the need to stay ahead of nations like China. Speculation grows that Trump may formalize Bitcoin's status as a reserve asset through an executive order upon taking office. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.